All right, time to talk about this horrible, horrible week of price action. More importantly, how to navigate this and what's actually important to us here. Because with this, it got me thinking, I'm always looking to learn. I'm always looking to share learnings and improve the edge based on numbers, like to get my feelings out of it. So today's topic well, this week's topic is trade management, profit management, and equity curve protection. And I'm going to explain what I mean by all this, why it's the topic of today, and why it's important. So I hope you guys are ready for some sauce, but it's not going to be heavy, heavy maths, but it's going to be like, focused towards the statistics and like ultimately, how do we make sure we make money no matter what? Because we can never really know when we're gonna get bullshit like this, right? But what we do know is we know at the end of the day, our edge is where is it? Time, price, data equals edge, right? So ultimately, that's the edge of the strategy. So we need to, and we know with that, we can comfortably get anywhere between 2 to 4 R. So if we know we can get to 2 to 4 R comfortably, we need to make sure that we're actually making money out of that, right? Because we know, through the strategy, like, just to do a quick recap, we know when to get in, we know where to get in, we know where to get out, and we know when to get out. Optimal exit entry time, optimal exit time, POI selection, PTLR. We know all of that. That's like the meat and potatoes of the strategy, right? That's fine. The thing that we're trying to not figure out, but optimize for is in any condition, considering that we're day traders, in any condition, how do we make sure that we take our money and we get paid? Or more importantly, how do we protect our equity curve? Because one of the things that I've struggled with in the past, and I know a lot of other people struggle with, is greed, is giving too much back. It's when to partial, when not to partial, etc., etc. Like, how do you manage the trade? So I've heard that, from several people. So I started thinking about it more, especially when like you get into a good move and then you feel like, oh, you've choked the trade or you've taken too much off or whatever it is. So here I'm going to focus on that. So I hope that's cool with everybody. And yeah, that's going to be the topic. So let's just get a little bit of feedback. How's everyone feeling? See what people are saying in the chat. Cool, cool, cool. How was everybody's trading week? That's another question. Yeah, this week was tough. There wasn't many setups and a lot of break evens. Cool. Oh, and that's another thing also I want to touch upon. Another thing that we that I touched upon last week, but every week I'm going to focus on it because I think it's one of the most important things in terms of being successful as a trader is we all know, how to enter. We go and do our journals and we know how to, when we do our journals and we're doing our markups, end of days, whatever it is, that's an example of playing offense where you're saying, okay, how could I have got in the move? How could I have made money here or here or here, right? But there's not enough focus on playing defense, which is why I'm going to keep bringing it up because it's the defense that ultimately leads you to being profitable, right? So I'm going to address the defense topic once again. And we're going to cover this week's price action because it was bullshit, but it's good for learning, right? So let's do some top-down analysis. So on the high time frame, this doesn't look nearly as bad, where ultimately supply overall was still in control. Say you've got a flip here, and then we scroll down to the 1 hour. We'll do EU and GU today. I mean, gold was bullshit. I didn't trade gold this week much. So I'll focus on EU first because that's what the majority of people trade in here. So we got our 4H. Then up until here, we could have argued that this was a POI as well. So we had this one that we were interested in trading from, which was the one that I was primarily in my outlook. This is the one I was focused on, which is why I took the short from here. I didn't expect this shit. I'm not gonna lie to you. This when I saw it like react from this, I was like, okay, this is a bit strange. And I closed quite a bit of my position, but I didn't think that I would end up getting hit break even. I thought high of the week is a Tuesday, easy money, Friday low. You know, but 200 pip range, I was expecting either all this to get cleared or at least to mitigate this or potentially take this out. So yeah, didn't go to my plan, and that's fine. What do I learn from this is the question. And this is the reason why I'm talking about this is because this is the kind of way you need to like approach weeks like this, where even if you have a plan, yeah, cool, you followed it to a T. If BS happens, you know, it's a learning experience, it's a lesson, right? The market's about to teach me something. So in terms of like how the week went, the process is the same. And I'm showing you this because, like I said, I want to drill in the importance of the process, which is we do the same thing every day, right? Because we know 90% of the time the move is going to happen after the Asia expansion. So, like I said, I'm going to keep drilling in this point. On Monday, this point helps you because you mark up the high, the low of Asia. You don't do shit until the expansion. Expansion happens. You see demand fail. So you had a demand chain here. Oh, hold on, before I carry on, is my mic like sounding weird? I just want to make sure that the quality is good. Okay. So with that being said, we got a demand chain like so. And what we're waiting for, same shit every time, waiting for the breaker, and we're also waiting for the expansion. We get a 2-for-1 special here. This has swept something. There is a concern here that they're equal highs, but keep in mind this. And this is something that, you know, I'm trying to train my mind to accepting as well, which is just because you see equal highs, I mean, technically this swept this, but either way, even though you see relatively equal highs, it doesn't mean it's going to get run on the day, right? It could get run the next day. Like equal highs need to be present first before it becomes a liquidity target. So if you do see this in Asia, don't necessarily be scared. But if you see the confirmation that ultimately demand is not in control, because like I said, the process that we always try to trade with is understand who's in control to be on the right side of the market, trade towards the money, look for a liquidity POI, which this was the liquidity POI I was interested in at the beginning of the week. So let's just mark this out. And yeah, and then ultimately, after you see that, use the data to be able to give you confluence to know, is this a BS trade or not, right? So that being said, Asia expansion has happened. Let's make this bigger. Asia expansion has happened, so now we can get in. Before that, what were we doing? Playing defense, right? Nothing to do. Seen our sweep, we've seen demand fail, so now we're looking for a trade. Go from the high, and go from here or from here, enter here. Short. Now, so you put your stop loss here, put your stop loss here. Either way, it means 10 pips we're arguing about. Let's just say for this example, and there's a reason why I'm talking about this, because you know we all love the magic fib, right? So let's just say for argument's sake, you took it like this. Even on a shitty range like this, you're still going to be able to get to the first target of 2R. Now, Why is this important? So the reason why the focus of this is profit management and trade management is for this reason. Even in rangy and horrible conditions like this, what I'm trying to do is make sure that no matter what, psychologically, I'm getting paid. And then two, the psychological advantage you get when you've like banked something helps in terms of now the next day, you're like, okay, I've got a free trade. So what I've been exploring is at 2R, no questions asked. Oh, TradingView updated. I remember they do this weird stuff now. No questions asked at 2R, bank 50%. Now, why am I saying this? Because ultimately, if you bank 50% when you're at 2R, you've got a free trade. And then you've got enough of a runner left that say this did go down to here, you're still taking 50% at 7R or something. That's still decent. And it allows you to be a lot more comfortable mentally with letting a runner do damage because it's still a big chunk because it's 50%, but more importantly, you're like, no matter what, I've got paid. So regardless of if you see range or whatever, you're not worried because you're like, okay, doesn't matter, I got paid. Yeah, you keep it at break even. So if you get taken out break even, don't care. I got paid. Like I beat the market that day. I did something 95% of people can't do. I got paid. Right? And it may seem like, oh, you're choking the trading, etc. It's like, well, no, because the alternative in a scenario like this is I take my 1R from my 50% or I leave with nothing. I'd rather have the 1R free shot and then be able to take this with little hesitation and be confident, right? Now, ultimately, my goal isn't to just get a bunch of 1Rs and then I ultimately don't end up, getting an average of 2R or 2.5R. The whole point of this is the fact that I know if I take 50% off at 2R, and then let's say I close everything for whatever reason, baby pip availability dictated that this was the target for the day, and I wasn't sure if we're bearish. If I took 50% off at 2R and the rest off at 3R, that still gives me a blended 2.5R target, right? Now, you're probably thinking, well, 2.5R overall average, I mean, is that good? Is that not? Well, that's what this is for. So I put this into a simulator to be able to just see, like, okay, if I risk, say, 0.5 percent per trade with a 40% win rate, but with a 2.5R average target, what does that mean in terms of my equity curve? One, it means you will not blow an account. So there's that. And it's got enough weight over a series of 25 trades that you should be able to pass any challenge and, make a decent chunk. And this isn't even factoring in dynamic risk. Because obviously, as you're in equity, you could be increasing your risk by, from 0.5 to 1%. So you could easily make a lot more than this. But the point is, it's to minimize drawdown because there's a, psychological element that goes with being in drawdown, as we all know. But more importantly, I'm just concerned with, is the overall system profitable or not? 2.5R, 40% win rate is profitable. So ultimately, the question is, how do we adapt our profit management system? I mean, we're not going to have a 40% win rate. We'll have a lot higher than that. But the question is, how do we manage our profit management system in such a way that allows us that even in bad markets and bad conditions, do we still end up with good average numbers that ultimately have positive expectancy, or in other words, a profit is profitable over a series of trades. So I hope that makes sense so far because I'm going to dive into some examples of this profit management system in action. So let's just get some feedback. Is everyone with me so far? Right. So if we model the strategy based on what I've just said, first day, first week, we tried to go short because we would have assumed this was the POI that got hit. That was marked out in the outlook. just I don't even get the Outlook, so it's not like I'm capping because I did first time ever post an Outlook before. There we go. This was posted on Sunday. This was a potential POI as well as this one, right? So first one got hit on Monday, so that's where we were. So we tried to go short, thinking that at the time this was probably the weekly high based on the statistics. We saw demand fail. We're trying to go and take this out. We took 50% off, so we got paid 1R in the bank. We're trying to run for this to get a 6R trade. Didn't work out. Okay, no worries. First day, 2R, no problem. First day, 2R, 1R banked. Can I do, let's actually track this somewhere. Stats this week. Monday, 1R, right. Okay. Next day comes. What are we doing again? We're playing defense until it's time to do some shit. So we're at the POI again. Like so. Oh, and keep in mind, I'm not interested in longing any of this because one, my bias was short. Two, I don't have any confirmation whatsoever to go along this from anywhere. I don't see supply fail. I don't see anything. Like the only thing that you could argue was maybe you were trying to do some New York continuation stuff. But like I said, it's this New York continuation is a confluence thing. It's not something that I actively like do as my Bible, my playbook. I'm simple. HOD reversal, low continuation. All I do. And I just use the statistics and confluences that I've noticed. But the main thing, like I said in all my entries, is these two entries, nothing else. But back to the point. So Monday's done, cool. Well, 1R up. Now, Tuesday is here, and what we're doing, we're playing defense until we get our entry trigger that we can actually start looking for a trade. So we mark out Asia high, Asia low, Asia high gets swept. We have a demand chain again. We have the breaker. This is occurred in the kill zone. This is the London session high. So P is here, T is here, L down there, R, a lot of range, right? So everything we wanted to see was here. This is a slam dunk trade. This is what we want. If we can get this once a week, perfect. That's all we need, right? Because this trade did damage. You didn't have to go on the 1M for it. This was clear as shit on the 15M. It was clear as shit on the 5M. Right? There's your reaction. There's your reaction failure. I got in super late, but like the point is, I mean, Dutchy caught this super early. I think Dutchy got in from like here, right? And I know there were a few other people that got in earlier than me. I was just falling asleep at the wheel or whatever. I got late to the party, but I got in because I knew there was enough range. Because I was trying to play the weekly move because I wanted this from the beginning. So if I had not been asleep at the wheel and I got in where I was supposed to, let's just do it this way. So 5M chalk, boom, boom. So there's your entry. As soon as it's failed, where is the annotation thing? London session high of day. So like I said, we're gonna go over it slowly again. Trading plan, P. There we go. T. There we go. L. Trade towards the money. There we go. R. Is there range from here to here? Of course there is. So the next thing now, if we're taking this as a HOD reversal, which is what you would need because you're doing as a HOD with just a breaker, no retest. 15 pip stop on EU Okay, let's test it. What does that mean to us in terms of the statistics? So, like I said, the data allows us to be versatile. So I'm going to give you an option. I'm going to give you a suggestion, but like I said, I'm trying to help create independent traders. So I'm going to give you an option here in terms of how you could think with the numbers. So here we have a 15 pip stop. So we model it, and then we let the model tell us what our profit target is likely to, what's our chances of hitting X amount of R. Because at the same time, we don't really want to choke the trade either, right? So 2022, 4 Rs possible, 5 Rs 50-50, right? Okay. So 4R, 70% chance. Okay, right. We have a big Asia range, but more importantly, we have looking at price, all this IRL. Now, the main thing that, and in terms of why I have this the way I have it, is I want to stress the importance of when we're trading, we are price action traders first, because price action is king. Then we know that price is drawn to liquidity, hence why we say trade towards the money second. Then data doesn't lie, meaning we're using the data as a confluence for what we see. Because the best indicator in the world is called EYES, otherwise known as your eyes. What do you see? That is the best indicator there is. So if and we're using our eyes to be able to determine who's in control based on we need to see a reaction to demand for it to be legit demand, for us to be able to therefore see, okay, demand has now failed. If we know that demand has now failed and we know who's in control, now we know we're on the right side of the market. That's the best confluence you're ever going to get because that's the confluence you're seeing in real time. Everything else is lags, right? That's why price action is key. Now, in terms of our framework, PTLR, we've seen everything we need to see. So we know based on 2022 alone, we had a 70% chance of getting to 4R. But even if we took it like the whole 10 years, we know 3R with a 15 pip stop, 70% chance. So we should be going for 3R minimum. 50-50 at 4R if we're taking account the 11 years, right? So this is just to manage our expectations. So we know what the stats of our numbers are, not saying, okay, because Mr. Coach over here decided to tell us 10R minimum or you're a shit trader is what you should go for. Because we can see with the numbers with this kind of stop loss size, there's only a 4.8% chance over the last 10 years that was going to happen in the day. So 10R target stupid, 9R target stupid, 8R target stupid, and so on. So realistically, this is the targets that we can get in a day, right? The numbers say that, the data doesn't lie. Now, with that being said, we know that 2R guaranteed basically at 86%, 3R 70%, and so on. So how does this go back to my point of profit management? I'm going to explain. So keeping in mind, we still have the data related to what the daily candle is supposed to look like and how it's going to form. Because like I said, what is our edge? Our edge is time, price, and data. All three being used in conjunction with each other is what is our edge. That's the advantage we have in the market. That's what separates us from being traders and gamblers because we're using these in conjunction with each other to have a statistical edge on what we're trying to do. So that being said, we mark out the trade in terms of risk reward. So let's use this one. So 2R we knew was guaranteed. 3R was the questionable one. But we know on the basis of how a day works, this low of the day is got an 86% chance of forming between 3 and 8 o'clock, right? So with regards to this, I'm going to show you two ways of managing this trade. So like I said before, the one advantage you have is the fact that if you have bigger stop losses, like 14.5 pips, you can trail your stop loss per R. But more importantly, in terms of the equity curve thing that I was talking about before, if you say take off 20%, 50% at 2R, even though you know it's guaranteed, and maybe you're worried for whatever reason that one of these will hold. But like I said, if it's all been mitigated, once one fails, it all should fail. But even if you did take off 50%, all right, cool. By lunchtime, you're already, and before New York, where you're worried that, oh, maybe you're going to get a huge pullback, you've already got paid for the day. This is the thing that I want to drill in everyone's head. The psychological benefit knowing that you've already got paid for the day when we always know that New York is always uncertain. Like we don't know, are we going to get a pullback? Are we going to get BS? Is there news coming up? There's so many things that could possibly happen that could just ruin our profitability for the day. Whereas if we've already got paid 1R and you got the runner to do damage for you, and like I said, it's 50%. Your volume you still got left. You still got enough volume to do damage. So 50% off, that's already guaranteed you 1R. You have a liquidity target to go for, which you're expecting to get hit between 3 and 8 o'clock. So in terms of like managing this trade, you're at peace now because you're like, okay, I've got 1R in the bank. You go into your 9 to 5 or whatever you do, and you come back and check after 3 because you know that's where the low is likely to be anyway. And how do we know this? Because we've got data. Because like I said, everything that we have in this strategy isn't based on feeling, it's based on statistics. So let's touch upon that real quick. So what do I mean by that? So if I go into the data, bear with me 1 second, as we all know this model is, oh, okay, that was quick for once. All right, so go on Euro USD and you see in the bearish scenario, the low of the day, between 3 and, let me knock this out here. Bear with me. Right. So as you can see, between the hours of after 3 and 8, we can see the probability of the low of the day appearing is between 45 and 84.4%. So because we're saying the window is between 3 and 5, we know 3 and 8, sorry, we know that the probability of it falling in this window is 84% because this is cumulative. So when it comes to like managing this trade now, if you take 50% off at the 2R, like I said, but you know that you've got a liquidity target to go for, that you're patiently waiting for it because you know that you're expecting to hit this between 3 and 8, but you've already got 1R banked. By the time it does get hit, you're comfortably waiting for this, right? You're not worried that, oh, I'm going to lose money, etc., because you've already banked 1R. So you've already got 1R banked before this has happened. And when you do get to target, meaning let's say you take the liquidity and let's say you take it at a hard 5R, 5R divided by 2, which would be the other 50%, is another 2.5R. So for the day, you have secured 3.5R. Not bad. And psychologically, more importantly, you're at peace because for a lot of us who, were or even are trading with a 9 to 5 at the same time, it is very peaceful knowing that before lunchtime, before you're on your lunch break, you've already banked 1R and you're just waiting for 3 o'clock to hit the rest of your TP. Because you know this daily candle, the cycle it prints based on the data. We knew the optimal entry time was London. We knew the optimal exit time was between 3 and 8 o'clock. And the low of the day happened at 3 p.m. hour, which is in line with what we know from the data. 3 o'clock, highest probable hour right there. The data doesn't lie, right? So the data helped us prepare for all of this beforehand. That's where our edge is. So Monday, Tuesday, you're already up total 4.5R. Keeping in mind, that's enough for if you've got enough in funding, that's enough for the month. And we didn't have any like news that was restricted to stop us from achieving this either, right? And that's another benefit of this also. If you do have news coming up, which we do in the next days, then you can uh you can afford to wait it out because you can get to your target if it's 2R quickly and then assess after the news whether or not you want to be involved. Now, the next day comes PMI. PMI restricted? Don't think it was. Let me double check. Anyway, okay. The next day comes, and where are we in price? We're at a weekly demand level, right? But if we're refining this, I would have wanted to look for a long here. So I would not have been interested in looking for a long, to be honest, anywhere here, and which is why I didn't. And even in hindsight, this wouldn't fit my plan, like because it's in the exit window. So this doesn't fit PTLR. This was just, one of those things that's like, okay, whatever. But what confidences do we have for the next day to go long is the question. So let's break it down. Same process again. We're playing defense until Asia expansion, but what do we know in the lead up to this? We know that this has come from a weekly demand. We can see this is a liquidity POI. That if we get a reaction from, and a failure, then we can say it's a CPB failure, then we can start looking for longs because we can determine what? That demand is in control. What else do we know in the lead up to this? You have one bearish candle, two bearish candles. So what's the problem? What the hell? Oh my days. Okay. 1 second. Why is this doing this? Okay. Bear with me. Right. Okay, that should be working now. Consecutive candles. So we had two bearish days in a row. What's the probability of three? 21%. So this day we knew there was a 78.2% chance of going long. So when I told you about daily bias, and I said we combine supply and demand and that statistic, that's an example of using it. So hit a weekly demand, but we still need price to be in line in terms of being able to confirm the bias. So just because we know there's a 78% chance of going long, it doesn't mean shit until we know that demand is actually in control. So here we have a liquidity POI that's had a reaction to it, but we're not going to do anything until we see this fail to know that, okay, we've got the green light to potentially go long, knowing that the bias is likely to be correct as well, right? So this is a combination of using price action and statistics to be able to figure out daily direction. Now, the process still doesn't change, right? In the lead up to this, what did we see? What did we see? We're using the best indicator ever, EYES, right? Our eyes. We can see demand is in control and we've got a nice demand chain, right? So we're not even looking for a short until this fails anyway, because why would we short into an active demand chain? We need confirmation that supply would be in control, which doesn't happen. But we're not going to do shit until what? Asia expansion. Same process. Mark the low, mark the high, don't do shit until it fails. Well, until it expands, it does. And in conjunction with that, we also see supply failure, right? CPB, breaker, whatever you want to call this, right? Well, that confirms demand is in control. Now, do we have a nice liquidity POI that we could trade from here? On the 15-minute, not really. So I personally would take this way of getting in. Because in terms of like the concept of what a retracement is, I need to draw the retracement from somewhere that should be protected. One, this is protected. Two, it's part of a chain that came from a weekly demand. Three, it also appears in the kill zone in the first 3 hours. So this meets PTLR. P, there's my chain. T, right time. L, there's no liquidity in this leg. So ultimately, what does that mean? IRL. And R, well, if I entered on the 50 like this, but I'm not taking it as a low down continuation, I'd rather have the statistical edge of my stop loss covering the low of the day because I know the odds of this, then I manage it accordingly, right? So we move this for now because we've covered the entry. Now it's about targeting. So it's the same principle again, but I've got a 13.7 pip stop. So put it into the model. Why is this lagging? Yo, I'm not responding. What the hell? Technical difficulties? Okay, cool. The only problem with Wednesday long was the entry was at news time. Yeah, exactly. But if you're on a funded account, uh, leave it alone. If you're on your personal or a account that doesn't restrict news, go for it. But then keep in mind also, like, well, one, with the way that we trade with big stops, even if you get slipped, let's say on this trade, because it's like a 14 pip stop. If you get slipped, you're not gonna get and you're risking 1% on this. Unlike if you were trading like with a 2 pip stop loss or 5 pip stop loss, worst case you're gonna lose is maybe like 1.5 R max, right? You're not gonna get slipped 40 pips or something crazy. Whereas, if you get slipped 10 pips, 15 pips, which happens, the reason why you see all these people on Twitter cry with their 2 pip stop losses is because if you have a 2 pip stop loss and you get slipped 10 pips, you're going to lose 5 times the amount. And then they're like, oh, manipulation. The bank saw my stop loss. Ah, shit. I'll trade with no stop loss next time. All this other bullshit. So, like, with a bigger stop loss, the risk is a lot less. But like I said, it's all about the trader's risk tolerance. I'm not saying trade doing news because that's will be irresponsible of me. But what I'm saying is the risk is a lot less with a bigger stop loss. That's all I'm saying. And we don't trade with stop losses that are under 10 pips most of the time. Like I don't anyway. It's very rare I'll get a stop loss that's under 10 pips. And if I do, it's still on the higher end of maybe like 7 or 8 pips. I haven't taken a stop loss. I haven't taken a trade with a stop loss of under 5 pips in maybe like 2.5 years, something like that. Or sometime when I attempted it in the community that we will not speak of. But okay, right. So 13.7, we model it, and I think this is already up to date. Double click just to make sure. Right, okay, it is. So basically 3R is on the table, 4R, 58% chance. Right. Okay. So 3R is the one that we want. And 2R, what was the probability of that? Let's have a quick look. 90%, right? So we're going in knowing, all right, cool. We're gonna get paid no matter what. 2R. 2R is guaranteed, 3R is still 70%. So, and then 4R is the stretch target, right? And we're expecting 4R to occur when? Optimal exit time. So after 3. So roughly around here, which is what you get, right? And it hits the other POI that we had marked out at the beginning of the week, more or less. If you account for the imbalance as well, it hits it. But we're not going to look for a short here. Like I said, that's hindsight bullshit. I wouldn't, even though this is like in the kill zone, we'll address it anyway. But for now, like I said, we're in the session. We went long. We're expecting a bullish day based on statistics. So what does that mean? It means if we're expecting a bullish day, if the open is roughly around here, but let's just do it. If the open is here, we're expecting this day to close above the open, regardless of if the fact that it's here RPOI. We're not expecting it to close below here. So that being said, how would you manage this trade? Like I said, 2R, take a 50%. And I keep stressing this. The reason why we're doing this is not to choke our profits or anything like that. It's for the psychological benefit because it's difficult to want to hold this knowing that when New York comes, how do you know this won't happen? You don't. So why give back potentially or go break even and lose everything when you could have at least ensured, all right, I've taken something home. Because keep in mind, Monday bought us a free trade for us to be even willing to take this with no real risk. And then Tuesday also bought us a free trade. So what I'm saying is when you buy yourself free trades, it gives you momentum in terms of one, you're going into a trading day, not passive, not timid, not, oh my God, I don't want to lose money today. You're going in knowing, okay, I'm up, I've banked some money, 2R, I'm up 3.5R for the well, I'm up 4.5R for the week so far. I'm good to go. Then with this day, you partialed 50, and let's say you're looking to go full TP in your exit window. You get to 4R early because 4R is realistically a stretch target because 5R is pretty low probability. 2022 4R still pretty high. So let's say you banked everything at 4R because, like I said, you're getting into a rejection area anyway, right? Because this was the next POI. So let's say you banked everything at 4R, but you took 50 at 2R. So the psychological benefit you got was 2R, you banked 50%, that took you to 1. Then you banked another 2R because you closed 50% at 4R. So this day concluded with you at 3R. And we have not needed to go much on the 5-minute, and we haven't seen the 1M at all. This has all been 15M stuff, right? Now, technically speaking, this is in a kill zone window. So let's explore. Was there an entry here or not? Because this still technically fits PTLR. The only entry I can see here, there's a reaction here to this demand zone. So that is a breakup on the 5M. If you wanted additional confirmation, you'd have wanted to see this fail as well. But to get in, you'd have really if you wanted like the perfect entry, what you'd have wanted to see was a low down continuation that came to the 50 and it came short of that. So that didn't happen. So the only entry you could have taken was this one, the first one. Now, this is my point. Where is this thing? Right here. For the fact that you've already banked 1R, 3.5, 4.5, 7.5R, because like I said, even if you didn't even have a good trading week on Tuesday or even this Wednesday that we've had so far, because of Monday buying you a free trade, and let's say you sat this one out for news or for whatever reason, this 1R that you banked allows you to take a free shot at something like this, because technically speaking, this still falls within PTLR, right? So really, this is still a realistic trade to take because you've got your reaction here. And then you just go break even once this fails. And you manage it the same way. 2R plus 50%. And then so on. So this is a valid trade also. So let's mark it up. And also, this is the reason why we don't trade in the middle of daily candles, right? Because like I said, But you wouldn't take this trade for what reason? One, it's in no man's land. Even if you were to say this is a liquidity POI, by the time you look to take a retracement, you're outside your window anyway. So you shouldn't be trading at this point. This time is for exiting. The only reason you can take this trade is because it's just about in your window. And in terms of PTLR, it's somewhere we marked up from the weekly outlook from the beginning. So this trade is valid. Then the question now becomes, okay, what would you be targeting if you did take this trade, if you're still assuming Wednesday bearish bias? Well, you'd be assuming Tuesday's gonna go because you're still trying to target the weekly low, which would be Friday. Or more importantly, if you're thinking that this is a weekly target, potentially, because it's imbalance before it, you'd be looking to target this. So now the question is, okay, even if you're trying to go for this for a 9R target, right? Is this realistic? Is this reasonable, given the fact that we know it's bigger? Given the fact that we know this is the weekly high on a Wednesday. So let's address the statistics of the landscape that's in front of us right now using our eyes. So when looking at this now, okay, so we're going to address two things here. So one, we're going to assess, is this a stupid target? And two, we're also going to address, with Wednesday being the high, what are the odds of it being the weekly high? Anybody has the idea why the audio is not working for me? Am I on mute? I hope I'm not. Can everyone hear me? Okay, right. So this was an interesting week. Because like I said, usually when we talk about the statistics, we're talking about like the typical, okay, Monday, Tuesday, 70%, 77% chance, blah, blah, blah. Right? We don't usually see Wednesday as the potential high of the week. However, that's not a bad thing because when Wednesday is the high of the week, if you look at the numbers, which is what I'm trying to teach you guys to think probabilistically every week. When you look at the numbers, it actually has more edge if you are expecting it. And by expecting, I mean we have our second POI that we marked in the weekly outlook over here from the beginning. So PTLR, if we see it here, we're gonna take it anyway. Because like I said, what are we expecting? We want to take the money. We're bearish bias overall, right? And I'm going to talk about how the fundamentals plays into this in a minute also. But let's focus on one task at hand. So we have a Wednesday weekly high. So now, what's the probability of this being the weekly high? Is the next question we need to ask ourselves. So just how we do it for Monday, Tuesday, it's the same principle, but this time you've got to look into Wednesday. So you go into EU, bearish week. What's the probability of Wednesday being the weekly high? It's the same principle, but you just drag it one across. So the probability of Wednesday being the weekly high for a bearish week is 84.7%. So this is very high probability of being the weekly high if we've got bearish bias now, because we've ruled out Monday can't be the high, Tuesday can't be the high, Wednesday is the current high. And if we've still got a bearish bias, then it makes sense for this to have an 84.7% chance of being the high. And given the fact that when we're looking at the data, if this is the high, the average weekly range for EU, where is it? This one? No, my bad. Where's this? Average weekly range for EU. Where is it? 198, 2023, 176, 2022, 179, right? So let's just be conservative and say 150, 160. Like just look for something that aligns with the PA. So This is 120. So this already aligns with a target we'd be happy with anyway, based on the fact that if we had to mitigate this, this would make sense. If we thought all of this is IRL and this is going to go to shit too, then a weekly target could be looking for this low, which is 200, or even here, like 17. We already knew the average was 179 the last 2 years. And we've had, keeping in mind, small weekly ranges for the last, since January started, the weekly ranges have been fairly small. So let's just go through that quickly. Let's go to 1 hour. So here is the see. So bear with me 1 second. I just want to do this exercise so you can see my thought process. So this range was, this is January, right? Counts. Yeah, it counts. So okay, first week, 162. Second week, this was shit. 87. The third week, 121. Okay, right. So where's my calculator thing? Okay, so let's do some maths here real quick. 162 plus 87 plus 122 divided by 3 gives us 123. So far, the weekly average for this month of January is 123. If we know that the monthly average for the last 2 years was around the 170s, that could give us a clue to expect this week to be an expansion week, or the last week to be expansion week. But keeping in mind, we've got some heavy hitter news tomorrow in terms of PC. This could be the catalyst we need to get the big 174 week to balance out the overall monthly weekly averages. Or we just have a historically bad January that, compared to previous years, is an anomaly. We don't know yet, but it is possible. I mean, we've seen it happen once in 2020, but keep in mind, this is COVID. This is a COVID year. Then again, COVID, lockdowns and shit didn't actually happen until March. So, it is what I'm saying. It's not impossible to see a bad week, but it's unlikely given the last 10 years. So we're just trying to use the statistics to look at, probabilistically what's most likely to happen. If we've had 3 small weeks, the probability of the large week being big to give us an overall average around 176 isn't crazy. Meaning tomorrow could be a huge expansion day to form the weekly low for the Friday and go for a previous week's low like this, or this previous week's low that hasn't got taken, because we know for a fact there's liquidity beneath here. There's liquidity here, we know there's liquidity here, and so on. So what I'm saying is, it's not crazy to think that something like that could happen, because what we could end up having here is just Asia range, like in this range for ages, and then get a huge expansion leg down after the news comes on the basis of the numbers, right? So that's just, showing the application of how you could use the data in that regard. But even then, like I said, if you did take this, it's not crazy to do so because, like I said, it does fit the plan. PTLR is happening in the kill zone. P is here. L is here in terms of liquidity. You've got IRL here to target, and R, there's enough range to get from here to there, which you would have ended up getting because this just is now the weekly low. So let's just mark that out there as well while we're at it. This is now the new weekly low. Weekly low. So on the basis of back to the data, yeah, exactly, Michael. So with that being said, if this is the current weekly low, we know through the statistics, it's likely that the weekly low is going to be Thursday or Friday, but our weekly range so far, let's get this. Yeah, our weekly range so far this week is only 110 pips, right? This is nothing, especially when we know based on the averages, we're at 123, and we're expecting a big week to get us to the weekly average of about 176 or whatever it is. So with that being said, we're expecting a expansion. So if you entered this trade, same principle, 2R, 50%, because like I said, it's late in the day and you just want to get paid. And you'd have went and you want to go to sleep like a baby, right? You'd be break even and you'd have taken 50%, not worried about, oh my God, will the bank see my stop loss and stop me out while I'm sleeping and then have nightmares all night, right? If you bank your 50% and follow the plan and the process, it removes the emotion out of it. And psychologically, it's just so much better. So Wednesday, again, so let's just like do Wednesday NY session. If you entered an NY only, that was your trade. So you banked 2R, 50%, so that's 1R. And then this target trade. And also keep in mind, the piece you get from if you close 50%, you just hold this and you wait till what? Optimal exit time the next day, because you're taking it as what? A swing trade, because you're trying to get the weekly move from this, because this is from the weekly outlook. So that's an additional 8R from you just chilling out and waiting, because you already backed 1R. So you're not worried about, oh, I'm going to get stopped out. Oh, I'm giving back too much profit. You've already got paid on this trade idea. So chill out, right? And this ended up going to 8R. So that's an additional 4R, because that's the remaining 50%. So that's an additional 5R, all within the plan, all within the process, mechanical process. Next day comes. What do? Same shit. Where are our POIs for the next day? Well, let's draw them. This, at one point, was a CPB. That was a valid one because some people, you could argue, were trying to potentially long from here when they shouldn't because it's in the exit window. But if they're not in PLD, they'll be doing that anyway, which is good for us because now these people are known as what? The local sucker. So the local sucker is in drawdown. I'm trying to long this, but he's got friends that are going to bail him out, which is what happened today. So this is the POI. Now, what are we looking for here? And this is why I said, be careful in terms of wait for the news, because we weren't going to be sure that we're not going to whipsaw. Like I took an entry here as a hedge mainly in case this was going to be valid or not. Because like I said, with everything that was going on with all this whipsaw, I wasn't sure if this thing wasn't just going to balloon to the sky. But the fundamentals related to EU should make us bearish because, like I said, and I'll talk about fundamentals a bit here. The main thing that is driving the sentiment on the market right now is when are the interest rate cuts going to happen? So I'm gonna give a very simplistic view of it just so it's easy to understand, because I know not everyone here is like really into the fundamentals, but this is the gist of it. So when interest rates go up, think of it like it's your savings account, like your personal savings account. If the interest rate is higher, you're going to make more of a return on your money in your savings account. Now, the application of that is basically the big foreign investors are looking at where they can park their money with the safest guaranteed return. If interest rates are going up, or staying high for longer, it means that they can get a better guaranteed return on their investment for longer. Therefore, there's more demand for it. In order for them to participate in that, they need to buy the dollar. I'm referring to the dollar interest rate, by the way. They need to buy the dollar. If they're going to buy the dollar and there's increased demand for the dollar, that makes the dollar bullish, which translates to a bullish DXY. If the DXY is bullish, EU and GU have to be bearish, especially EU because it's almost directly inversely proportional, right? They literally they mirror each other in the opposite way. This goes up, this goes down, right? So with that being said, given the fact that, so the main thing is the sentiment around the dollar is this. The bets were that they were going to reduce the rates earlier because inflation, they believe that they'll get to their inflation target of 2% on track. The last CPI announcement that we had, they missed, which shows that inflation is more tricky than they thought, meaning they have to keep the interest rates higher for longer to reduce consumer spending and in turn reduce inflation faster to be on track. If they're keeping the rates higher for longer, that's what drives the dollar demand. So that's the reason why we're bearish in terms of EU and GU. And that's why we're seeing the DXY still rally, because the sentiment around March being when we're expecting the rate cuts to happen is gone, and now they're expecting it to happen in Q2. So for those who are interested in fundamentals, that's the reason why. Now, back to the technicals, because like I said, I am 80% technical, 20% fundamental, but I do like it when they are in line with each other because it means we can take high probability setups. With that being said, we have our CPB, that's also a liquidity POI technically, which I won't draw here. This swept here. So this is our point of interest. If you wanted to refine it, there you go. If you're one of these Forex snipers, there you go. Super refined, sweet. And then if you want to refine it even more, there is your inducement. Nice and sexy. There you go. Lovely. Now, with that being said, what's our process? Process is the same. Mark the high, mark the low. Now, Carolina spotted this in terms of like the right trade idea. It was just a question of like, okay, right trade idea, need to have everything aligned for perfect execution here. Because she marked this POI in the morning in the analysis chat. She just got in slightly too early, but the idea was still valid. So I hope she got back in because she would have made a killing. But either way, like I said, mark the high, mark the low. What do we know in this day? So let's break it down because like I said, the edge is price, time, and data, right? Time, price, data. I should probably do it the other way around anyway. I will change it. Anyway, there we go, right? So how do we apply this to create our edge? Mark the, don't do shit until the Asia expansion. Asia high, Asia low. So transparency, I was in this trade as a hedge in case this ballooned to the moon. Once it started messing around here, I lost faith in this, so I went to break even, and then I was just like, if it takes me out, it takes me out. I'm not going to get back in. And then I said, I'll wait for the news because I knew this particular news, ECB, has anything interest rate related, either Bank of England interest rate, Fed interest rate, ECB interest rate, has a very, very high probability of whipsawing. So because I know that from experience, I said, wait for the news. Because like I said, whipsaw likely, especially considering we're consolidating like this. But what do we know statistics-wise in the lead up to this? From a daily bias perspective, you had this bearish day, now you got a bullish day. So this consecutive candles thing has reset. So today we have a 50-50 day. It could go either way. What do we have? In terms of where do we want to trade from long? So if we said this swept this before breaking structure, this is a liquidity POI, potentially we would have wanted to long from here, which is what made the long idea for me valid in terms of, okay, Asia was printed the low and swept something in the POI. I've seen short-term supply fail, which is why I said, okay, once I get the expansion, I can look for this long. But keeping in mind the fundamental narrative which dictates the long-term move is bearish. This is a counter trend trade. I need to be careful here, which is why I went break even and I said, if it takes me out, so be it. I'm not going to fight it. And I'm not going to look to enter any like 5 minutes, 20 minutes, whatever it is before a news announcement like this. Because like I said, this is like a what they call a seek and destroy profile where you've got consolidation, and because there's no real uh it, the big players aren't really doing any positions right now. This is for liquidity generation. It's just going to whipsaw and take out both sides, which is why I always stay out until after the news if I've seen this type of price action. Because like I said, my eyes are the best indicator. So that being said, you mark out your POI like you have here and you wait for PTLR again. So P in this scenario is here, and what you're waiting for is T, L, and R. It arrived, so the news announcement, the ECB decision was at 1:15. So that was the first amount of bullshit. So there you go. There's your high of the day in New York. As the data says. Oh, for God's sake. So we mark this out, New York session high. Now, like I said, we don't do risk entries here. So what do we need to see to confirm bias? Well, you have this demand chain. And then when this takes out all of these people, you can't tell me that demand is in control, because that was the case. Why did demand just stop me out like hell? Or sorry, why did supply just stop me out like hell? Because if I was saying demand was in control and I'm trading on the 1M or something, my stop loss is something like this. And I've just been then I start complaining on Twitter, I just got slipped 3% because I got a 4.5 pip stop loss and this thing just slipped me 10 pips, right? And I've just lost 3%, right? So with that being said, that indicates demand is no longer in control. Now, with that being said, what could you have done? With this being high of day, and you're at the high of the daily candle, you're not looking to take this as a continuation. You're looking to take this as what? A HOD reversal. So your stop loss has to cover this. But if you did the homework, like I said last week, you knew you could take this with minimal risk. How? Right side of the V. You wait for the dust to settle because you also have another news announcement straight after this one, which is also restricted at 1:30. Once this has happened and shown its hand, you've had that sweep and you've had one close, two close, three close. Now you can just enter like this. It's zero drawdown. And now all you need to focus on next with your 15 pip stop loss. Notice how I think every trade we've done so far has been 15 pips. But yeah, 15 pip stop loss. So we know based on that data, 15 pip, roughly whatever. 3R is viable, 4R is a stretch, 5R we're not thinking about, right? So manage our trade accordingly. There you go, 4R. Now, how do we manage this realistically? Let's take off 50% here. Well, in terms of following the process. So you banked 1R. Partial profit, 50%. Wait for optimal exit time, close everything else, 4R. So that's 2R plus 1R, so that's a 3R day. Where's my tally? Thursday, 1R plus 2R, because we closed 50%, equals 3R. And that means your tally for the week today equals, what is this? Equals 1 plus 3.5, 4.5, 7.5, 12.5, 15.5. 15.5R in the week. And that's without accounting for dynamic risk or anything else. And that's still taking 50% off at 2R mechanically and then letting the rest do damage and getting out in the optimal exit window in line with pip availability. Because like I said, we go for 4R for what reason? In 2022, the chances of you hitting 5R are 63%. We don't go for targets that are lower than 70%. Right? Why would you not close at 3R? Well, you could close at 3R based on this, but you'd be choking it, but you could, because it's still in your exit window. But I'm stressing this point. The reason why this is good is because it removes the emotion and it buys you trades. So no matter what, because you know 2R in any of these scenarios is a 90% target in any year, apart from, okay, these two. But you get my point. Over 11 years, in any of these setups, 2R will happen 90% of the time. So you know, no matter what, you're getting paid. And ultimately, we're here to get paid, right? So there's also the peace of mind knowing, okay, 2 o'clock's happened, I hit my target, got paid, let the runner do damage. When you've taken your 1R, got paid for the day, that's where you set your alert. You say, okay, I don't know. Like, let's just do this for example, right? Let's move this bit here. Oh, shit. You go TP1, TP2, right? TP1, TP2. This is where the advantage is of doing this. Oh, let's just adjust this actually. Let's say this is TP1, this is TP2, this is TP3, right? You set your alerts, like visualize this with me. Like, you know, and the reason I'm stressing this is because this is realistic trading in terms of like managing emotions and dealing with the BS and, you know, everything else you got going on. When you're trading and then you set your alert, there's no advantage to you chart watching this like a hawk when you got a job and other shit to do, right? So the whole advantage of this is you set your alert, you set your partial to go 50% at 2R. It goes ping, you're like, cool, I made money today. I did something 95, 99% of people can't do. I'm the top G or top woman G, because we've got ladies here too. Good job, right? Amazing. You got your 1R banked. Now you're at peace for the outcome of the rest of the day because you're break even and you got paid. And you're just waiting for after 3 o'clock, because you know this daily candle's low will print between 3 and 8 o'clock 84% of the time. So rather than watching it like a hawk at 2, what do? You go for lunch. You go have a cheeky Nando's. You go eat with your wife, your husband, your boyfriend, girlfriend, whatever it is, or go play video games, or go cut grass, whatever you want to do. Go do something else, because there's nothing for you more for you to do other than wait to hear TP2 hit, ping, and then you decide, are you gonna partial again, or are you gonna trail to 2R, and then know that no matter what, that's another thing I need to stress before I forget. But yeah, are you gonna decide to partial here, or are you gonna decide to take full volume off here or here? Up to you. But the beauty of this also is once you bank your 2R at 50%, now what you should do is when this is closing, but let's go on the 15M to make it even easier to manage. When you're seeing candles close, 15M candles close, you know, enough distance away from 2R, what you should do is now move your stop loss here. Because then you guarantee no matter what on this trade setup, you're going to, no matter what happens, you're leaving with 2R because you partialed 50% at 2R and you trailed it. So no matter what, overall for the trade, you're leaving with 2R. And why is that important? Because like I said, in order to be profitable, based on the maths, you don't need to do too much. What is this thing? There we go. So what I mean by that is this, which you've seen this all before. Even at 1 to 2, 40% of the time, your win rate, you're profitable. That's all you care about. You're in this game to be profitable. If you're profitable making money, like I said, you're not going to need more trades. You just need to get more capital. Apply that consistent profitability, and you'll be able to get more funding. And it's just a question of time, but you know the process works. And all the trades that I've shown you today, they're not, oh, but this discretion, that. It's like, no. You play defense into Asia expansion and you apply PTLR every time. I've shown you the same setup all 4 days. It's either HOD reversal or lowdown continuation. That's it. So in this day, I think we covered this. And then you just manage your trade accordingly. Once you hit, let's say you hit 4R, if you're super greedy, you'd still trail this and then you'd have left with 3R. But that's the whole point, protect your profits. Like you can do the same thing here. And that's the beauty of it. If your stop loss is 15 pips, you have the luxury of doing that. I know I've like been motor mouth and gone, probably ranted or gone a bit fast, but I hope that makes sense. See what people have to say. Does that make sense, guys? Right. Okay, cool. And that's how you could have approached the week, even though it's BS like this in terms of ranging, but you can see how the weekly outlook, which is over here, but the weekly outlook translated into all of this, right? This was the plan we had on Sunday, and that was the execution of the plan. First POI, we thought false positive, we thought it got hit. We banked 1R and it messed around on us. Next day, wait for the process, banked 3.5R on that day. Faked us out. We weren't expecting this move, but we knew with consecutive candles, if we saw the confirmations, we could go long. We did. We hit this POI, which you already marked at the beginning of the week. Saw the confirmations to take the money going into it and away from it. Then the next day, same thing. Now Thursday is the low. What's likely? Well, it's a 50-50 day because we had one bearish day. I can see supply is in control, so I'll be looking for a continuation short. We're gonna range for a while. So I'm anticipating for tomorrow. How big is this range? Let's see. This is what? Yeah, okay, that's about right. Asia will probably look like something like this. So let's just model it. Is this coming from a CPB? Yes, it is. So let's mark this out. What I would want to see ideally is a continuation short from here. Asia will mess around and I will be asleep, so don't care what it does. Not going to do shit until Asia expansion. Then I look for confirmation entry for HOD reversal trade to go short to at least hit this or this. That will be my plan for tomorrow. If I don't get my confirmation entry, I'm not going to touch it. And I am aware of the news tomorrow. So 1:30, it might mean I have to take an entry after 1:30, which is fine because if there's still range in the day, that just means you've got higher odds. Because if you look at it, EU bearish here, if you enter after 1:30, so you entered, let's say at 2, if you cover the high of the day, there's a 91% chance you won't be stopped out if your bias is correct. So it just means I've got a super safe stop loss. So I don't mind waiting for New York for this. Because if this is gonna do the same thing, like range like hell in the lead up to this news announcement, then I'm totally fine waiting. But if I see my confirmation in London and I can get risk free, I'll take it. Because keeping in mind, crap. Keeping in mind when we look at the data related to Redfold and news, and we look at EURUSD, do I have? I don't think I have that particular news event. Let me see. I have PMI, ECB, Fed interest rate. The data shows it's still skewed towards London and Asia. So it means if Asia gets swept high, then the probability and I can find a London kill zone entry, I'll take it. If I can't find a London kill zone, okay. Let me model this real quick for you guys. Let's say, for argument's sake, change the color. So if this occurs in London, I'll take it. Oh, is it lagging? Everyone fine? Is it clear now, or is it still lagging? Just making sure this is actually recording, because that would pretty peak if it wasn't recording. Okay, cool, it's recording. Right, okay. If this happens in London, given the fact that the data is still skewed towards Asia and London for this type of red folder news, we see the confirmation entry in the kill zone, I'm going to take it. If I don't see the confirmation entry in the kill zone, so let's model this whole day real quick. Model some scenarios. It's green. Okay, so let's model some scenarios real quick before we end this call because we've got a couple minutes left. And I know people don't like to be here too long, and I don't want to drag this out too long. So, what is the thing? So let's just say, for argument's sake, we have a Asia range that's roughly around 25 pips. It's reasonable. It's not unheard of. So let's say we have this ranging. We're not going to do shit until the expansion. Expansion happens. So scenario one, we wait for the breaker and chalk, and then we get this short with a New York pullback, and then we die like hell, right? There's your HOD reversal in the London kill zone, and then there's your continuation trade for New York on the basis of either you take it like this, or this is a liquidity POI and you take it from here. But for illustration purposes, I'm going to actually, to make sure it's crystal clear, because I don't want that to be misinterpreted. So like I said, Asia's ranging, you get your breakout. And New York comes here and you die, right? Okay. Then this technically is a liquidity sweep, right? So in this scenario, London would be high of the day. London would be high of the day. Then you can either take, if you're a London trader, let's model this. What's time frame? Okay, cool. If you're a London trader, this is what you'd be looking for. And that's your breaker, and that's you in. And then you're in. There's my short tool. Wrong one. Wrong one. Oh, there we go. If you're a London trader, you could be in like this. Or like this on the breaker, whichever one, doesn't matter. And that's you, Mr. London, you're in. Cool. If you're a New York trader, let's remove this out of the way. If you're a New York trader, there's your liquidity POI. So you can either draw a fib in two ways, either from the high of the day to this, enter like this, or enter on the right side of the V and put your entry like this. Stop loss here, entry, right side of the V. So you enter with no drawdown, break even, TP1, TP2, TP3, or you draw your fib from the liquidity POI. Break even, TP1, TP2, TP3. Those are the scenarios that we trade. HOD reversal, LOD reversal, low down continuation from either liquidity POI, high up day, or a CPV continuation, meaning we're looking for a reaction from a CPV of some kind, like this. But it's always better if you see like something like this this is the least probable one. Like you wouldn't want to take a fib like this. Let me just model it. You wouldn't want to take a fib like this because it's still a gamble. So let me show you. Because, okay, the idea behind coming back to you is to mitigate this. So technically speaking, you're expecting this to be a retracement towards this POI, but it's risky because it hasn't swept liquidity. So there's not real, the only argument for manipulation here is to say that once upon a time, this guy was a local sucker because he believed that he could go long from here. But the best POIs are always high of day or daily extreme, I should say, and the liquidity POIs where you can see obvious manipulation. Because the way I see smart money trading is the fact that at the end of the day, the only certainty that we know in the market is that the market is going to be manipulated. And you know that if you can see manipulation, that the footprints of smart money are that they're just going to come back and mitigate the manipulation. They're not going to take it out. And we're just trying to get on the footprints of that. That's the whole concept of smart money trading. Regardless of if you hear ICT said this, 2-pip stop loss master said that, who gives a shit? That's the whole idea is manipulation is guaranteed and we're trying to trade the footprints of it. End of story. You know, whoever created it, like Wyckoff existed 100 years ago and he is the real inventor of smart money, to be honest. That's all you need to know. But yeah, that's just the recap of this week's price action and how you can use this systematic profit management approach to get profitability and guarantee profitability, as well as the psychological advantage of managing your trades like this. Because like I said, when you're looking at the equity curve, if you are averaging 2.5 R at 0.5% risk, you're not going to blow an account, first of all, and you're going to be able to hit profit target eventually, because overall, over a series of 25 trades, it is profitable. And even with that, the average that we were getting on that profit system that I just showed you was more than 2.5 R. This is worst case scenario. Like we had 1 R on that day, 3.5 R the next, 3 R the next, 5 R the day after that, and 3 R the day after that, for overall week of 15.5 R, all following the process. Not one of these trades was like, oh, this discretionary, let's modify the model and do a little bit weird shit here to make it fit. Like, no, we did the same trade 4 days in a row. PTLR, following the system. If you're patient and you follow the process, you'll see your setups. And now this element I'm adding isn't me changing anything. It's just profit optimization to guarantee that our equity curve is protected, it's safe, right? Because it's a lot easier to trade when you're in profit than when you're in drawdown. And if we're constantly at least getting paid these easy 90% strike rate profit targets at 2R, you're guaranteeing that you're putting money in your bank account. So even in a choppy market, you're gonna hit your 2R if you've got everything else right in terms of PTLR. Like it's guaranteed. Because like I said, even with the stop loss that's 20 pips on EU, as long as you're covering high of the day and you got your direction right, 80% of the time you're gonna hit 2R. That's why it's powerful. And it's not me just saying that. The data proves that, as you know. So that covers what I wanted to cover today. Different topic, but I think it's a valid topic because, like I said, when you're in uncertain market conditions and you're ranging, you need to have faith in knowing that your your strategy is uh is capable of still extracting profit out of the markets, but as well as it's capable of extracting profit out of the markets with a statistical edge, which I've just proven to you on this call works. Not cherry picking, literally showed the outlook beforehand, showed how to trade the outlook, showed and I, throughout the week, showed the trades I was in. So it's possible. So that's an example of, you know, offense. Everybody needs to work on, including myself, how to play defense. The strategy has elements of defense, Asia expansion being one, and taking partial profit 50% at 2R being the other. Because these 1R partial profits that you're taking will add up. Even in a week where you make mistakes, you're still taking money out the market. So this allows you to make mistakes, but it still gives you enough volume to do damage. Because there will be a week where you sniper, but let's even do just a quick example before passing. Okay, for example, what's that? Whatever. Okay, let's just use this as a very extreme example, right? Let's go back in time real quick. Friday. Okay, whatever. Let's just go with this. Right? Let's go on the 5M. Is this gonna work for me? Yes, it is. Good job. Okay. 5M, there you go. There's your breakup. Boom. Breaker happens, you go short here, you cover this. 16 pip stop. All right, cool. You close 2R like this, then you're like, okay, I think this is potentially weekly high or whatever, because all this is IRL and sentiment is whatever. If you're taking this and you're a swing trader, but you're content for whatever reason, that 2R that you took and you left the 50% runner, eventually you'll get a situation where it does damage for the month, and then you get 14R, which is 7% for free, right? There will be a time where this happens. And that's the advantage of having this process, because if you keep doing that and you're accumulating positions on the way down, these 0.5s or these 50% runners that you have will accumulate to a very big position over time. And if you're in a trending market, and this is on your personal, you will do a lot of damage by the time all of this gets wiped out. And all it takes is like to build a position like that over time, one time, and you've made your year. So I just wanted to also stress that this is another reason why this profit-taking system is good. So yeah. So if you're a position trader, that's the other benefit of it as well, which I'll be covering on the course in more detail. But can't cover everything in these weekly stuff, but I try to give as much value as I can in the 1 hour and a half that we have per week at the moment. But yeah, I hope that was informative. I hope that was helpful. And yeah, we'll see you guys next week. And remember, it's you versus you. And remember your why in terms of why you're doing this. And use that to keep yourself motivated, even in days where you don't want to show up to the market and you don't want to trade, and the market slapped you and you're like, this is borderline gambling at this point. Is it really worth it? Remember your why, and remember you need to be systematic and have a process to make sure that that fine line between gambling and trading, you're on the right side of. Key point there. If you're not trading with an edge, you're gambling. So make sure you're, like we did on this call, you're putting all the pieces together to make sure you're always having an edge. Because as soon as you lose sight of that, you're gambling, and you're better off going to a casino. So I hope that helps, and we'll catch up with you guys next week. Thanks, everyone.